What if I told you that in 1 minute you can actually do a simple fundamental analysis that's going to help you generate good trade ideas? No, I'm not talking about building spreadsheets to track hundreds of economic data that before you enter the chart, price has already been moved. So something that removes all the noise that is called the real thing because markets are forward looking and markets trade in expectation. They don't trade due to data. Some people would tend to take the trades when the data are released, which is usually not the best approach because markets, like I said, trade on expectation. So now I have a couple ideas generated on USD JPY and some of the dovish banks against the Japanese yen. We all know the weakness of the yen has been due to some political risks, the election of the new Prime Minister Takashi, etc. So first things first, a lot of people are screaming bear market for the S&P. Let's first look at the chart here for the dynamic yield curve, which is simply the spread between the 10-year and the 2-year treasury uh, spread, the real interest rates, if you will, which is a 10 minus 2s. So let's look at stockcharts.com. All right, so here we have the dynamic yield curve. And as you can see, this is the current price of the S&P 500, and this is the yield curve. Yield curve is still positive, which means we are still in positive stocks territory. And what you've been seeing lately with the whole drop, this is currently 19th November 2025. All the whole drop you've been seeing in the stock market is due to, it's just a discount, 7%, 5% discount. Market is never really in the market until we see a 20% drop from the highs, right? Okay, so now yield curve is quite optimistic. This means investors are optimistic because the yield curve is still normal, if you will, right? So now this is for stocks, meaning the stock market at some point would recover and post new highs. Now let's look at stocks. Let's look at the S&P. So this is the chart of the S&P 500. I had a couple zones. I looked up for pullbacks here, like we had this one here and it posted new highs. I was just at it into the 100 moving average. Now, I don't just trade based on moving averages, if you will. I like to use a fundamental analysis, sentiment analysis, and also technical analysis. So let's look at the valuation tool. This is a simple tool I use to gauge value, in performance, and performance. So let's also look at interest rates because we know move relative to interest rates. Also, yesterday we got Nvidia's earnings, which was quite good. The revenue was above expectation by 2%. They beat their earnings by 2%. We'll look at that later on. So right here, we slipped below the 50-day moving average, which a lot of people got scared. And if you look at the put to call ratio, a lot of people became bearish. The AI investor sentiment also became bearish. But in the market, did this. Now, if you go back to a lot of times we've seen something like this. Like we go here, the drop during the inauguration or the Trump tariff, and then we made a V shape, bottomed out, and since then it's been up. Now, a lot of institutions missed out this here. If you had bought after we closed up the 50-day moving average and your stop low here or somewhere around below this candle, yeah, very good profit. And for a very long time, yeah, we closed below the 50-day, we opened above it, wicked. It's been seen as support and resistance. Also, the supporting price also here, support price till we close below. So personally, I'm looking for close. of the 50-day moving average. Today, we get that today or tomorrow, I would actually reignite my buy positions on the Nasdaq. And I think I already have a position on the Nasdaq. The Nasdaq is currently above or still trading within the 50-day moving average. So if we close above the average, I am going to look for a buy in this market. Okay, that's it for the stock. And also, if you look at against the dollar, we are undervalued. Against interest rates, we are undervalued on the short-term basis. And on the long term, we're below 9, which is below 0. Um, Now let's go to currencies. But before I do that, first things first, let's look at something very interesting. In order for you to trade any asset class profitably, or no strategy is 100%, you need to have a clue of insight. The first thing in markets is fundamental analysis, and then the second is the technical analysis. Fundamental analysis gives you a bias, and the technical gives you entry points of the way I like to do fundamental analysis and sentiment analysis, then coupled with technical analysis, right? So here we need to look at, and also I'll be teaching you guys how you can utilize ChatGPT or DeepSeek for easy fundamental analysis, right? So here we go to think ing, no, sorry, think ing, yeah. Now, ING Bank is an economic institution or a bank, if you will. So first things first, we already have an idea on certain currency pairs we want to trade. Also, before we go into their different macroeconomic data releases and performance, first of all, I would like us to look at the ING Bank. Come, what is also their forward or their forecast, right? So forecast. Now, first thing first, I often like to look at the um the headlines. It said AI monthly AI habit of making stuff is growing concerns as resilience on AI models grows, ensuring their accuracy is critical. Not really something. Okay, let's look at this. SG Omnibus, three proposals, but a common path towards major scope reductions. FX Daily, rally at on despite December's cut in doubt. Commodities feed renewed stocks way oil prices. Okay. Now, some rebounds in euro dollar should be on the cards. Just 2 hours ago. Uh, Equally, I'm looking for that as well. It's with my analysis. And also, it says here, rates spark blinkers on into euros. Um, Nightly, the real estate, the US economy of Indonesia holds rates. No, not what I want to see. Rates spark an eye on the risk sentiment. Okay. The commodity feed diesel market strength persists as tightness concerns linger. Fix daily bracing for shock, but shock. This was yesterday. And this is the current news here. It says, this is from FX Daily. It said, um, dollar rally overdone despite December's cut, but some rebounds in the euro dollar should be on the cards. Now let's look at the book from institutional players themselves before we also I tend to use this as an odd enhancer for my analysis itself. So focus. Let's go to FX. Let's look at the USD JPY. So for The fourth quarter, 2025, the ING Bank just released their G10 forecast. Fourth quarter of 2025, USD JPY is expected to trade around 152. First quarter of 2026 around 152, and then second quarter of 2026 around 150, quarter of 2026 around 150, and then the fourth quarter of 2026 around 158, right? So seasonality itself is screaming bearish. And I also tend to look at something else which is called cycles because, market is to move in cycles, value, sentiment, all that, but market in general moves in cycle. It is cyclical and also seasonal. So the ING Bank is forecasting a bearish USD JPY in the fourth quarter of 2025 to 2026. Now for Euro USD, it's forecasting a rebound from the fourth quarter of 2025 up until fourth quarter of 2026. Same thing for GBP USD, rebound likely, but not really as you would expect for Euro USD because the Bank of England is currently in a difficult situation as well. Um, the Euro JPY is expected to continue its upward rise. Euro GBP as well. USD CAD is expected to flip bearish at some point. The UD/USD is expected to continue its rise, and NZD USD is expected to rebound slightly at some point, if you will. And let's go uh to emerging markets. Not really something I would to look at. So my main focus here is the USD JPY, right? USD JPY. So the ING Bank is forecasting a steep, continuous, steady decline until the rest of 2026. Now, why this forecast? So let's go to another institution I like to look at, which is the uh let's go to another institution I like to look. Also for Bitcoiners, we would look at something real quick. But first things first, let's go to economics. So in economics, we would look at the forecast for currencies. Hmm, surprising. Since these guys have changed their ways, all right. Um, already a user sign in. Because I'm already a user, I don't know why they are asking me for a balance for payments, right? And your bank should work on their. And cool. All right, sign in. So first things first, let's look at USD JPY forecast from ING Bank. So look at ING Bank and then we'll also look at trading economics. Um, Look at forecast. The market is really also forecasting. So trading economics themselves are forecasting a drop from 157 until the target 159 to 158, if you will. Slightly the same. And we know the Bank of Japan has openly said that if the dollar yen reaches 160 or approaches 160, they are cautiously monitoring the dollar yen. And for that approach to 160, they are going to intervene. And we know the Bank of Japan and the Swiss National Bank are popularly known to do what is called currency intervention, right? So they've openly said that they are open to intervene in this market if the rally continues and it go closer to the 160 mark. So okay, this puts us on track as well. And let's look at the euro dollar. For the euro dollar, I personally also said the euro slipped to 1.15, its lowest, its lowest level in roughly 2 weeks. Wage, so the euro slipped to 1.15, its lowest. So said its lowest levels, roughly 2 weeks, weighed down by a stronger dollar as traders reduced expectation for a 25 basis point Fed rate cut in December. The shift in sentiment followed cancellation of the employment report. Yep, they have cancelled that as well. And FOMC made minutes, showing policymakers were divided over the need for further easing. In contrast, the ECB is expected to keep interest rates unchanged through the end of 2026, with inflation hovering near its 2% target, stable economic growth, and unemployment at record lows. The central bank left rates on hold in October for a third consecutive meeting. Meanwhile, the European Commission raises Eurozone growth forecast for 2025 to 1.3%, up from 0.9% in its spring projection, citing a surge in exports to the United States as firms increase inventories ahead of Trump-era tariffs. Growth is projected to ease to 1.2% in 2026, down from 1.4% before edging up to 1.4% in 2027. So clearly, we see the Eurozone is being, they are comfortable where they are. So this is more like what is it called? A monetary policy divergence here, where you have the ECB saying, okay, we're cool with our interest rates where it is. We are holding up until the rest of 2026, and we are seeing slight economic growth going into 2027. And the dollar itself is just beginning more like an easing cycle, and they are still a few more basis points away from neutral. Let's go to forecast for the euro dollar. We know the euro dollar is one of the major currency pairs in the dollar index basket, with 57% weight or weighting in the dollar index. So here the ING Bank is forecasting same the Trading Economics, the euro dollar exchange rate fell to 1.5 on November 20th, down 0.09 from the previous session. Over the past month, the euro dollar exchange rate has weakened by 0.62%. It's up by 11% over the last 12 months. Yeah, the euro dollar exchange rate is expected to trade at 1.17 by the end of this quarter, the according to Trading Economics global macro models and analyst expectations. Looking forward, we estimate it to trade at 1.19 in 12 months' time. So the 1.19 to the 1.20 area is still valid, because we know asset managers have been betting on the euro dollar to reach 1.20, and we've seen ING Bank since 1.19, and also the 1.20 level is still valid in my book, if you ask me. So here we have two banks validating our analysis, right? So let's look at the dollar card as well. Dollar card is a pair I'm kind of like interested in. I really prefer the dollar yen, if you ask me. So because the of Canada is also, yeah, they are close to neutral when it comes to their economic monetary policy and the US itself. So I said, let's look at the summary. Canadian dollar traded above 1.40 per USD as a relief spike after Parliament approved budget, right? Budget is That one off quickly faded because the deeper drivers for the loonie, which is the Canadian dollar, not change. October inflation cooled to 2.2%. As you can see, inflation is really close to their 2.2% or 2% target. So to me, they are more like hawkish at this point, which weakens the case for persistently tighter Bank of uh, Canada and limit Canada's carry advantage. Now, the policy rate sits at 2%. So remember that policy rate is sitting at 2.25% and inflation is sitting at 2%. Domestic activity also looks soft with housing starts plunging above in about 17% in October. But there is a little evidence of the growth that will lift Canadian yield relative to the United States yield. The real yield when you're talking about interest rates is the yield or the treasury divided by the inflation. So to me, I think the US still has a positive yield over the Canadian dollar. But when it comes to forward guidance, the Canadian dollar is looking forward to not cutting as much as the United States or the Fed. So here it says so there's little evidence of the growth pickup that would lift Canadian yield relative to the United States. The commodity channel has been unreliable as oil swung around on inventory points and it's taken, right? Removing a steady external bid for the currency elsewhere, shifts in Fed cost odds, and episodes of firmer US rates have allowed the dollar to reclaim ground when yields move against Canada. So the relief-driven rally lacked the follow-through needed to sustain a stronger Fed. But now, if you will. So looking at a longer term, I won't tell you where Canadian dollar, US dollar is going to go in the next 2 days, 3 days, 5 days. But I can tell you that in the next medium to long term, in the next 1 month, 2 months, we would slightly or we would definitely start seeing some downside in Canadian dollar or USD CAD. So, okay, further validated. Now let's look at the countries and look at what we take away from this. Let's look at commodities because I really love gold at this point. Seasonality is giving us a very trade on gold. Not now. You have to wait for that. Uh, Commodities, saying uranium, German gas, Brent crude oil. I don't want energies. I want commodities. These people don't have gold. Oh, let's go to metals. I think it's precious metals. Ethanol, coal. Okay, commodities. I don't know why these people are not bringing up gold. All right, here it is metals. So investors would definitely rush to buy gold at some point, but not knowing that the gold prices fell to around $4,060 per ounce on Thursday, following a two-day gain as investors continue to back expectations of further monetary policy easing ahead of key job data. The recent FOMC minutes revealed a split among Federal Reserve officials over the need for rate cuts, on between concerns about a weakening labor market and persistent inflation. Traders now assign just a 30% chance of a rate cut next month, down from 50% a day earlier. Meanwhile, the delayed September non-farm payroll report is set to release for late today, which is Thursday, and is expected to show modest job growth. The BLS, which is Bureau of Labor Statistics, said it will skip the regular October employment report as household survey that cannot be collected retroactively and confirmed that October's figure will be incorporated into the delayed November release, adding to downward pressure. Improved risk sentiment across equity markets has reduced gold's appeal as a safe haven, right? So here we look at forecasts, and still, you see gold is still forecasted to rise. Looking at seasonality, it gives us a view or gives us more like a best time to buy or best time to be a buyer. Definitely, I don't want to be a seller on gold or silver. I want to be a buyer, right? So same things here as the ING Bank. Now, um, let's roll back to crypto. And for cryptocurrency, I like looking at something not quite traditional from what you already know, something slightly more different, if you will, very different, very, very different. Um, I like to look at this, the check free website actually, check chain, check on chain. Let's go to check chain and see. Helping investors navigate Bitcoin volatility like a pro. Okay. Then here we scroll down. Hmm. Why on-chain analysis? Those are just we'll go to chart Bitcoin on-chain analysis. Hmm. Oh, we go to the hodler's dashboard or to oscillators, the STH indicator in the originals. Let's look at the originals. Yeah, we'll look at Bitcoin originals. We'll do a little to see if we are currently cheap or expensive when it comes to Bitcoin buying. Really don't know why this thing is taking a long time to load up. Taking a whole lot than I anticipated. Mm, okay, so here we are. Um, Currently, well, I think we realized price, counter price, balance price, delta, true mean price. Now we look at the true mean price. So true mean price, we've been we were one Bitcoin was at 5K. we're below the true mean price. If you had buying around here, it was undervalued, rallied, we came again here, nice buy zone, rallied, also here as well, here, and we saw this big rally, and at some point it became um expensive if you will. So I think Bitcoin going down to Bitcoin below 1K for me or 80K for me would be a very nice buy. Right now, hitting 80K would be nice, or going below it. If we see Bitcoin hit 50K, then that would be freaking nice. I'm just saying, it's not as if I don't want to keep rallying, but the more this thing is undervalued, more it favors you as a whole, as a trader. So I will look at we'll look daily cost basis model, Bitcoin's multiplying through mean ratio, tracking macro comes to a moving average, let's see. Let's see if we're in the top or in the bottom on the underlying asset, which is Bitcoin. So, okay, so looking at this using this one module from 2012, it became expensive, pulled back, expensive, we came back here, nice buy zone, if you will. It rallied, another buy zone, undervalued. Here it became overvalued. Here it became undervalued. Here we got undervalued relative to the value of the asset. We were undervalued. And also we are close to being undervalued on Bitcoin using this particular tool. So I think, like I said, a drop to 80K or less, a drop to 80K to 79K would be nice zones, areas to buy. I'll definitely keep my eye on Bitcoin to see when we get undervalued using this metric alone. And now if we go back to the buy cycle on Bitcoin, this one is very interesting. Now all this I'm giving out is expensive paid knowledge for free. All right, so these are the tops. Tops. Yeah, versus Bitcoin tops out and it rallies, right? Here we got the bottom, buy, sell here, buy here, sell here, buy here. So at some point, when we see this cross, which is a little bit far from, we're not close to the spot. When it happens, right, we would definitely look for Bitcoin buys. If we get buy um signal here, nice, that would be definitely nice, which is it looks like it's already forming, if you will. But if we get something this and it tops out. So for me, Bitcoin hasn't really topped. We've not really seen that cycle yet. So we're still within areas where we can look at Bitcoin. All right. So let's go back again to um go to the euphoria zone. Mm, Bitcoin's euphoria. That's So the market is still within bullish territory from what I'm seeing. And I think, okay. So the euphoria here, it tops out, goes down, euphoria, 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 and also another euphoria zone here. It's heated. MRV ratio is heated. We've got euphoria here. Euphoric, the market became euphoric. Same thing here. Markets became euphoric. And we're not really seeing that here, if you ask me. So there really isn't a lot of euphoria in this market. So to me, for me, it's still bullish, if you will. It's just a case of count, wax, wax. Now let's look at the model transactions estimated for volume, fair value. I think if you're buying the dip on Bitcoin, man, the dip is going to continue dipping until 80K for me would be a nice buy. Coin blocks, NVT, volume price 28 day. This is not what I want to look at. Not this. This long time hodlers. I said adjusted, inflation adjusted price, tracking the balance of wealth held by long-term hodlers versus fast money. Yep. Let's look at the long-term hodlers versus fast money. So, with the current movement, what are the long-term hodlers doing? Are they selling or are they buying? Okay. Um, Currently we are somewhere around fair market territory. Yeah, the ratio is high. When the ratio is high, it tops. When the ratio is low, it rallies. Ratio high, tops. Ratio low, rally. High, tops out. Ratio high, it tops out. The ratio is and low at this point in time. So I think, yeah, Bitcoin is just moving into a discount. So like I said, 80K territory would be nice areas to buy Bitcoin. Uh, let's go back again. I want to make sure I touch all the metrics here necessary for the spot ETF metrics. ETF daily net flows, cumulative, ETF volume, cash carry, aggregated market volume, weekly flows, then liquidation, option metrics, interest, put to call ratio. Let's look at the put to call ratio. Something I really like to look at when I'm trading. Okay. The put to call ratio here, markets became bullish here, market were bullish and Bitcoin rallied. Market became bearish, it continued to rally. The market became bearish, Bitcoin continued bearish again, and Bitcoin rallied. Bearish. The market has been bearish, if you will, all through. And we've been seeing Bitcoin going higher, higher. So I think this is just a minor pullback. A pullback to 80K wouldn't be a bad idea. So maybe back to 80K or somewhere around 85 keys would be nice. Um, so we'll look at options by expiry, open interest, implied volatility. I want to start bringing you guys to confuse you guys because some of you don't really know what that is. Let's just go to It's a 90-day put, 90-day calls, 30-day put, 30-day calls. This is for the options market, but let's forget about that for now. Um, let's look at the long holders indicators. So the momentum. This is taking more than expected, but yeah, it's for the greater good, if you will. Also, we'll go back to so here, positive momentum. And here we have positive and negative momentum, right? Uh, mm, really, Bitcoin is really shaking up for a big rally. But I still think we still have a long way down to go. A long way down, long way down to go. There's something I'm trying to track, but I haven't been able to see that here. So we're currently seeing moderate spending in Bitcoin. There's heavy spending, heavy to moderate, moderate spending, moderate spending, moderate spending. Long-term holders, binary spending indicator. I don't know what I want to see. Transaction volume estimate for fair value. True market mean. Oh. This asset is kind of complicated, but if you tend to piece the puzzles together, it helps relieve you of a lot of stress. Now, technically, I trade supply and demand, sometimes trend lines, sometimes support and resistance. So, with all this information I'm gathering right now, I would then go to the chart and say, okay, what do I have here and what can I do? Okay, when we see spikes, we are now we're still a little bit far from this line. There's another metric that when we get to this line, realized price, we are going to get flip or when people go below the zero line, uh, fine, right? Long term holders are fine. Now, first level of interest is DK, right? Look at ATK, ATK. So look at also the hodler's dashboard. Crypto, crypto is more like a new asset that the drivers are not really. You have to piece a lot of puzzles together in order for you to form a fundamental driver for crypto, which tends to be stressful. So I most know that to stay away from it. I don't, I don't do it. To be fair, I don't even trade it. It's just too much involved and too much. Forex is a bit more easy and crypto very easy. If you understand forward guidance, you definitely understand how to trade Forex. which is just based on because most central banks have a dual mandate where you have maximum and stable prices. If you focus on those two things when it comes to trading forex, yes, you are going to find your life more easy and less stressful compared to this bullshit. Mm, I'm not saying crypto is bullshit, but it's just so much, so much, so much, so much analysis to be done. It's not even loading up. I think the information we've gathered is enough for me at this point. So now, looking at the how to use AI. We've taken a lot of time for on this video, so I think I'm going to just leave that for another day now. We're seeing USD JPY being bullish, forecasted to be bullish. Let's look at the chart. I think I already took a trade on that as well. Yes, I already entered into a position, and I'm holding on to the position. I think it's at 148, 148. My target is going to be, yeah, 149 to 148. So also on the euro dollar. On the euro dollar, I like, I think I'm gonna check out this. I'm not gonna take any trades as I already missed this one. I won't take any trades. That soon. So if I get any on here before the Fed's meeting and the forward guidance looks quite good for a buy, I would definitely buy euro dollar and hold up until 119. Yeah. Now, pound, I don't really like the pound much, and obviously, I'm still willing to go short this pair if it comes back down to, yeah, I'm still willing to short this pair if we up into this 4 hour zone. Yeah, still willing to be a seller if it pulls back to that 4 hour supply area. I'm not willing to sell the euro against the dollar. No, not me. It's just too risky of a decision to make. But for this, most definitely. Now, let's look at the card, the dollar card. We'll be getting our COT report on Friday, which is tomorrow. So for dollar card, we are approaching a nice level. We're within the supply, but I like the bodies of the candle more. Indecisive candle. Okay. We're approaching this supply area here. And if you go down to the daily time frame, we find anything within, yeah, we do. We find this drop, rally, Beijing candles, and then a steep drop. So from here, if you want to trade wicks of the candle, let's say from here to here is your zone. And we're very close to that. I'm pulling back into the weekly, so I would definitely prefer to go with the weekly zone and probably have my stop loss somewhere around here. So let's say covered by the weekly, I would do something like this. Uh, something like this. Yeah, I can leave. You can leave your stop loss here if you will, but I'll that's a bit a little bit more technical. So this. My target would be this demand zone here, and then my should right the above this one. So I would like to see something like this unfold. If it does unfold, then I have a trade on dollar card. Right now, I missed the buy position. Slightly almost came close to the zone and moved with me. So yeah, that we missed that one. Hmm. So now let's go to other. I like the Aussie yen because the Aussie is also flipping dovish. But I think if this one breaks, then the next level to look for sells or shorts should be this one above, and this further increases our profit margin. This one looks very much better. So much better for so. Hmm. And my target would be here or all the way down here, but I would prefer here. So if we lose this level, I'm only risking 0.5%. If we lose this level and we come back up to this level, I will take another short and I will look to be covered up until down here would be very nice level to take profits on. Same thing for CAD yen, Canadian dollar yen. We seems like we both this level, it's not as fresh. It looks we tapped into it here and we traded downwards again. So here, up base, drop this level. Looks more like it to me. If continue to rally up the way up into that level here, I will look to take short and I will look to take profits. I will look to take profits here. That's if this level doesn't hold, because obviously this level is no longer fresh, but this one here is fresh. And let me highlight the zones. I doubt we're gonna hold this level, so I think Canada can still ease interest rates as inflation is still going lower. And, Bank of Japan is the only bank that's looking to hike interest rates this off. And but since we're trading against the yen, I would advise we look at yen crosses, look at the yen. Since I like you using futures, let's go to futures chart. Let's do dollar against yen, close to overvalued territory, not really overvalued against the yen, but quite close. Here we go, overvalued. So here also we're very close to that overvalued readings. So that's on the futures chart. We're trading close to. an important level up here. Using supply and demand, we are currently approaching drop early base. Drop. We're currently approaching a level of interest, which is case one, which if you go to a weekly time frame, this is equally a level of interest. That we would use the COT data to see if there's divergence between buyers and sellers of yen. Also, you look at Canadian dollar against yen futures. Yeah, we're definitely overvalued against the yen on the card. Also, let's look at the pound. Pound is screaming overvalued against the yen. Aussie as well, very close to that overvalued regions. The New Zealand dollar, I hope we are overvalued at this point. Yes, nice. This further validates my analysis. So, at yen, I would look to add a trade. Uh, but the main is yeah, at the end, New Zealand yen, Aussie yen, and pound yen. So here we have CAD yen, which is forming. I would be interested to see how this candle continues. 15 minutes to the close of today. So today, this candle forms a shooting star. And also tomorrow by 7:30 p.m. when we get the CO2 and there's institutional activity around the yen, accumulating the yen, and it would be very nice to be a buyer of the Japanese yen around these levels. So let's look at the pound yen, pound yen, pound yen. If I see, if I get institutional activity shorten the pound relative to the yen, I look to add this tomorrow, Friday. Because the COT data gives us a more you know, clear insights on what sentiment is, what fund managers are doing, commercials are doing. Also, let's take a look at the New Zealand yen. So New Zealand yen is, I think I'm further going to extend it down here. 1 to 4 would be very nice. I don't like the wicks on that window. Just 256 here would be cool. And also, if we maintain this, hold these levels, I would be interested to see how we close today and what COTD has to offer us. Also have a very nice supply zone here. Um, I have a very nice supply zone here above price. This one. So if we break out and hit this level, this would be more profitable. And that's why I'm risking less than a percent on each of these trades. The macro fundamental bias is already there. Technical timing is the problem. So you need to understand technicals come after macros or fundamental, and it can be difficult to time sometimes. So if we lose this level, I'll definitely go with the one above this. Um, yeah, we look for the end, look on the end. There's a trade I'm currently in. It's Aussie CAD. Australian dollar is slightly undervalued against the Canadian dollar. I would have really loved to see us back all the way into this zone, but yeah, we didn't get that. We traded into this level I got at stop. I hit stop loss on this one to spread the spread stop loss is the very one straight and look at the valuation of the Australian dollar against the CAD. Mm. Look at against the CAD. It's yeah, we're coming from undervalued territory. So I'm currently in this trade. I entered somewhere around here, and I'm looking to hold up until maybe we get overvalued or we hit this highs. So now let's move to crypto. 91K. We're currently at 91K. Bitcoin. And like I said, we are close to the weekly chart. Here's the level with about big stuff as well. Let's strictly move with supply and demand now. The level we would see around 35K. Yeah, except for this guy here. For which I doubt we would come all the way down to 5K. That one. This one also looks good level on top of level here, which you can use to, but I don't like the zone. No need. Like the one below. And then here, I have this one. And here, I've dropped base, drop rally base, 85K, K. The old start from the body of the. Here we have a level on top of level on Bitcoin. If you want to, you can do this. But since they are all within the range of this candle, I would just add this one. Now you can be more aggressive and do this. Okay. This Bitcoin is a very volatile asset. Can be more aggressive and do that. Level on top of level. I would really love this lower one. This one looks good with 100 being average. So I think if you want to be more conservative, if you want to be more aggressive with your entries and say, since we're not in a cycle top, you can look to him. You can combine these levels, or you can just go with this one and not expect Bitcoin to hit 70K. So let's see how this goes. Oh, let's see how it plays out. If you I think that should be all for now. We're currently undervalued against the dollar. Mm, Look at all the metrics. All interest rates, dollar, we are currently undervalued. I think this level would be nice to buy. Yes, and especially seeing this on a weekly chart. A drop into this 100-week moving average would be very nice. It will lost the 50-week moving average. And if you want to take your trades back to the 50-week moving average, this would be nice. But I would definitely look to hold if we close above this. So now let's go to the daily time frame to see if we can find any zones on there. So if you drew the zones exactly the way I thought, or the way I mentioned earlier, which is by incorporating it here, which is the way it's supposed to be. This is where the body of this decisive candle began. Now let's go down to a daily time frame. See if we can find the entries. So here you have drop, base, rally, base, rally, base, 1, 2, 3, 4, 5, 6. You have this level here, and you can equally cover this whole level if you wish. So be more aggressive, you can say like this, or you can do it like this, or you can just say 80K is your mark. But I would say, okay, maybe you do like this, so you cover all the zones, or just like this, so you cover this one. 82 would be nice if we get it. Let's see how it lines up with the 50-week moving average. So it lines up nicely. So 82K is nice to grab a hold of this asset. And then let's look at the 100. On the daily charts, we've lost both the 100 and the 50. So on a weekly chart, I think this should be the level. So yeah, that's it for Bitcoin analysis. Yeah. And if you want to be more aggressive, you can see for 5 to 1s, but this should be nice. Very nice level to buy Bitcoin. So that's it for today.